Leading uranium miners on the ASX have rallied 70% in the last month. Many of these companies have broken out of volatility contraction patterns, cup and handle patterns, as well as high and tight flags. We're looking at 9 of the top miners to see how and where they broke out to get into this rally. This is Final Market Points, where we connect the leading market themes and the top performing companies for better trading. You can like the video to support the channel, click subscribe for updates, and comment below to let us know which uranium miners you're trading and what patterns they've broken out of. Now today we're going to run through what led the ASX uranium miners, what got them started. We're going to look at the uranium leaders, the systems sisters, and the laggards. We're also going to look at the volatility contraction pattern, the application and where to learn more. Also, how they move with high and tight flags and pocket pivots in conjunction with volatility contraction patterns, and then 9 uranium miner chart reviews. So first off, we see how and what drove these uranium miners. It's pretty simple to see that the spot price has moved 27.7% from the recent lows down near this red line of the 200-day moving average. That's the spot price of uranium. And then we can also see Sprott. So the recent physical uranium ETF that's been launched, we can see that's rallied 37.5% just from its lows less than a month ago. That's really what started it off. There's not too much more to it to look into it than that. So now we jump over and have a look at a chart to see how the VCP works. And we can see that Energy Resources, ERA, on the ASX, has had one large contraction from the highs that it saw in December, January, coming down to the red line, 200-day moving average, rallies back up about halfway through the range. Then it fails, comes back down, doesn't quite touch the 200-day moving average, but it forms a sort of support and then breaks into another rally for a higher. But then the third contraction, so this is the first contraction, the second contraction, the third one, even though it's a larger rally, is a tighter contraction and then consolidates around the 50-day moving average, which is critical from a pocket pivot perspective. Because this is a volatility contraction, 1, 2, 3, and then it breaks out. And you can see these 3 strong days, 3 strong candles breaking out of the VCP. But what happened back in here in the base around the 10-day and the 50-day moving average was pocket pivot breakout with some decent volume down here. So that's the critical point of looking at how the markets move with the leading thematics. We're looking at the thematic, and then we're seeing the technical analysis of joining these patterns, whether it's VCPs, pocket pivots, or high and tight flags. And that's what we're consistently doing on Final Market Points. So you can subscribe to get all of those updates for leading industries, technical analysis, and then top 6, where we're consistently surfacing these leading uranium companies. Now, quickly on the VCP side of things, Mark Minervini created this. He's the 3 times US trading champion. He won in 1997, and he did that with 155% annual return on a long-only portfolio against derivatives and hedge funds with long and short or hedge fund type portfolios. So he created the VCP. That's what got him to lead, and he's written many books about it. Now, we've also got some descriptions. You can click on the link below to see some summaries of how that VCP is applied, traded, and calculated. And then we also have in the description below Gil Morales and Chris Karchat that have created the pocket pivot. So this is an extension of the famous can slim and cup and handle pattern that William O'Neill has made quite famous. These two worked with him. They've written their book of how they applied the pocket pivot for backtesting for further refining. And we're going to jump into some charts now to see how these pocket pivots work with the VCP and a leading market thematic for some of the best trades. Silex systems here, SLX. We can see that we've got some sort of a VCP, debatable, but a cup and handle. So we've got this rounding base and then this little handle here, and then it breaks out with some decent volume down here. That's VCP or cup and handle breakout number 1, leading to a massive rally of over 100%. It tries to create a high and tight flag, but fails. Not one to discuss for Silex systems now, but it creates the volatility contraction pattern number 2. So see from the highs, it drops down, rallies from those lows, but the rally is nowhere near to the highs, and then leads to another drop down to the 200-day moving average. Forms a bit of a base, tries to rally from under the 200-day moving average over the 50-day, fails, comes back down under both, churns sideways, drops once again, has a bit of a rally, drops once again. So as we're seeing, it's like a basketball being dropped. Each bounce is getting smaller and smaller and smaller until this tiny one here under the 200-day moving average, which is critical because most VCPs you want to see trade come from above the 200-day moving average, but it does break out with volume, and that leads to where we are today. Moving on to Boss Energy. We've got two good VCPs, or a VCP and a cup and handle. On the left-hand side, cup and handle breakout, more than a 30% rally up here, has a pullback down to the 200-day moving average. The green line stays above the red line. That's the 50-day moving average, is above the 200-day moving average. It does have a bit of a breakout. If you're looking for a pocket pivot, there's one in there. But we're coinciding this one with a cup and handle. So if you're using William O'Neill's cup and handle patterns and sort of a cancelling method, you would see that there's a decent thematic running here, a good theme with it. We'll see many other uranium miners. But we do see, as it breaks out of this handle part of the cup and handle, we also see that it broke out earlier with a pocket pivot. And that's what we're going to see a few times in many of these other trades, because we've got the VCP pattern here, 1, 2, 3, 4 contractions, and then a breakout. Boss Energy has done it, but what we're going to do is also look at Lotus. Lotus, we see the cup and handle once again, around the same time, cup, handle, and then breaks out, trades up, then has a contraction. So this is the start of the volatility contraction pattern. 1 contraction, 2 contraction, third getting much tighter, rounding out a bit of a base. We can see there's some tight closes in here, low volume changing hands, attempted rally fails, and then this pullback here is even smaller, and then it breaks out. Off it runs, and then into this rally that we have seen here, which is far more volatile once it gets over that 10-cent level. That is a VCP for Lotus Resources. We've got the recent listing here of 92 Energy. 92 Energy, 92E is a ticker, NTE, 92E. Recent IPO, so that's why we don't have anything to the left of the chart. When they listed on the boards, jobs rallied. Now they've created, whether it's a VCP, not really, because the first contraction is then surpassed by the second contraction. But this explosive movement that we see from above the 20-cent range, shooting back up, this can lead into a high and tight flag, because these are critical movements, very fast, rapid volume, huge gains, more than 100% gains. That's a perfect setup for a high and tight flag. What it does over the next days and weeks, possibly 2 weeks, is when they set congestion that can lead to the high and tight flag. There is a description below in the link, a link in the description below to see how to trade high and tight flags for ASX listed miners in more detail. Now, Elevate Uranium is the next one that we're looking at. EL8 is the ticker. They've got that first fast high and tight flag. So not really a VCP, because it was pretty sideways churn consolidation throughout this period, but it breaks out, explosive movement, 15 cents up to 30. Doesn't quite consolidate, we'll go back there. Doesn't quite consolidate for 2 weeks, but quickly breaks out and extends for another 15-cent gain. So we see 15 cents from the breakout point to the consolidation, and then once again it breaks out of this consolidation, puts on another 15 cents to get up to 45. That's a 100% return that we're looking at. So 100% of the gain that it's come from, and then adding that on top of the breakout level. So measure this 100%, 15 cents, put it on the breakout point, 15 cents. And then we're seeing it happen again, 25 to 50 cents. It is possible for a consolidation. If the uranium miners as a group consolidate here, that's very constructive for all the high and tight flags. And as we saw with lithium last week, and we've seen with uranium now, if one of them starts breaking, it's quite possible that there can be a domino effect and more start breaking thereafter. We move over to Paladin to have a look at 2 charts here. You'll notice that the y-axis on this chart is very different, 10, 20, 30. This is a logarithmic scale. We had to use this to really zero in on have a look at the first VCP breakout. This one here has come from the large contraction on the left, rally, a smaller contraction, and then whether you call this as a small contraction in here or not, but it does break out nonetheless, and then starts that rally. So we're talking about over 10 cents, sort of 15 cent breakout here, and then rallying over 30. That is 100% gain, but it doesn't show as much on this chart. We'll see more of it in the next one. But that does lead them into a high and tight flag with the consolidation here, and then another rally up towards 40 cents. We'll move over to the linear scale to see what that looks like. So here's your VCP breakout that leads into that high and tight flag. It's a bit hard to trade, but you can see that it did break out and then put on another rally from 30 up to sort of 45 cents. Didn't quite reach that profit target level of 100% of the rally leading into the high and tight flag, but nonetheless a very solid gain coming out of that VCP that we saw before, and then some sort of consolidation. Where we see the next VCP is they're not really contracting, but very similar, so more of a different pattern there. But this is what's been happening for a few of the other charts around the same time. So it's really echoing that importance of looking at the industries and seeing the other sister companies, how they're trading, and whether there's a laggard in there, whether it's worth following or only sticking with the leaders. That's a greater assessment and for another conversation. But then we have the breakout. So we're coming from just over 40 cents to just under 90 cents yesterday. High and tight flag, that's possibly building. We'll see how that comes in the next 5-10 trading days to see how that develops. Moving over, we see Alligator Energy. Now we've got the high and tight flag. This one failed, and what we'll note is that there weren't too many other uranium miners moving at the same time, echoing that importance of looking at the industry to see how it goes and whether there's more sister support like Jesse Livermore called 100 years ago. This is building into another high and tight flag potentially, coming from under 2.5 cents to getting over 6 cents yesterday. Again, we'll see how they form, because this will be critical to watch the next 5 to 10 days to see whether these sister companies potentially building a high and tight flag continue to support each other and break out together. Then we move over to Greenland Minerals. Now, Greenland Minerals could be building a VCP. This seems to be the laggard within the group. Because of the support that we've seen with all these other companies that we've just had a look at the charts, it is critical to see, well, if we do get a pocket pivot here and around the 200-day moving average, that really could be the flag or the shot of the gun to get them going from 12 cents to maybe 24 to set up for a high and tight flag. Time will tell. But that's an interesting aspect to watch the laggard within the group to see how that is performing or not performing. Once again, we're surfacing these companies into leading industries because uraniums are definitely breaking out, the uranium company miners, and that's what we're consistently bringing up in the top 6 companies for shares in play, which we've done most recently, almost every month since this uranium theme really started running out. So really like the video to support this channel. You can click subscribe to keep on top of when these leading industries are breaking out and the top performing companies in them, and then technical analysis like we've just done here to see what's going on.